So we have this nice drop down in here, okay? And we made our way below the low of that there. So now what I'm looking at is, does this inefficiency between here and here, does that hold any control over price wanting to go higher? So I'm looking at the bodies in the upper half. If it can get outside of that, that's problematic for continuation going lower near term. It doesn't mean anything long term. It just means that reading price action the way it is right now, sell side is here, and it's in close proximity to that low too. Below this low, this wick, if you grade it, midpoint consequent encroachment is here. So it could, if it wants to drop down for the sell side in here, it could touch consequent encroachment. Let's with this wick here. This in here becomes potential inversion. So now that it's outside of it, you watch it like this. Watch this little separation as well. Because if we get above that on a body basis, it might use as a foothold to spring up into that low there. I'm sorry, not low, good grief, high. Okay, so watch this wick in here. If it can't even touch the consequent encroachment midpoint of that and rallies that strength, this one here, it opened, traded down into the inversion there. And we didn't so far at this moment have not touched the consequent encroachment of that wick. We're seeing the foothold aspect here after using it as an inversion very value gap there, and the buy side being there. Once it hits this buy side, should it do so, you would screenshot that, and then you would break that down in here, and you would look at it like this. So if we did this to that level there, you would screenshot and utilize that as a lower time frame. We're in a moment chart. So what are we referring to? A 30-second or 15-second chart. Wick here, the body needs to stay above that for continuation to the upside, and there's your run on liquidity. We'll drop down into a 30-second chart. You can see all the things I'm talking about still holds true. It trades down to the inversion fair value gap, comes back up. Now look what the bodies are doing here. Once we get in the upper half, the way I teach real institutional order flow, once this occurs, that closes above the halfway point of that gap, the bodies need to stay out of the lower half. The bodies close is right there on the midpoint. We open slightly higher than halfway, and then the body closes on the high end of it. And then we open here and run out of it. And then the run from that low here to here is now measuring all of the wicks on the downside, the discount wicks. This wick here, we didn't even touch the midpoint. Here, we did touch it. We traded through it, but the bodies are not touching at all. So they're above it. So that's institutional order flow still maintaining bullishness. Price runs up, falls just short of the high. A little bit of retracement's okay. It comes back down. What's it retracing inside of? That fair value gap. That fair value gap, it can overshoot that and still touch that gap's high. It doesn't. That's immediate feedback telling you that it's still bullish. The market rallies up, takes out that short-term high here, and then runs, and you watched it clip that buy side. We traded back down to that fair value gap here, and we're seeing a little bit of sensitivity there. Watch this little gap here with the volume imbalance. And notice how it didn't even come back down to it there. That's strong. That's very strong. And it came up, make a higher high. And you can view this also through the lens of a 15-second chart. Look at this wick here. Consequent encroachment would be just about that midpoint of that gap. We trade down to it here. The bodies stay away from it. They use it here, rally up. So what we've done is we created a value area low without any bullshit and a value area high with any bullshit. No bullshit required. And there's liquidity above these highs and below these lows. Okay. If you measure this range from this low to that high, you'll get an equilibrium price point. Here's halfway. Okay. Or equilibrium. It trades above it here. And then in this one candlestick, it comes right back down to a level I already told you to watch. That range. over here. Well, it was done on a 1 minute chart. Let's be fair, Michael. Sell side imbalance, buy side inefficiency. If we trade above it, that's potential inversion. It trades to it here. This is equilibrium. The real point of control is watching where these fair value gaps form and the wicks and the consequent encroachment of them. That's the real point of control. And you're seeing it visually being represented here in a simple open, high, low, and close candlestick.